Hello guys, welcome to the Trading Parrot. Early this morning at 7:40 a.m. I published this video already mentioning the potential pullback targets for this week. A few hours after, we talked about 67.2 being the first potential conservative target for a pullback. That was published on Telegram, Instagram, and on Twitter. We get 3 different aspects for confluence. And now that we have already pretty much reached the target and we seem to be bouncing from that target into the next fair value gaps to the upside, the question is this going to be just a dead cat bounce? Are we going to see further continuation to the downside? And there are a few aspects at the moment that are making me scratch my head and think, what's really going on? We are breaking out and some indicators are showing some bearishness in here. Some sneaky whales have mildly started dumping on us. In this video, we're going to talk about that. I'll give you the full detail and what I'm thinking at the moment. I have to say it's a little bit concerning and I want you to stay informed so you can make the best decisions. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes, guys, on Saturday, we made it to 347 likes. That is fantastic. Thanks so much for that. I know I've been asking for it, so thanks to you. And I'm hoping that in the next videos, we can maintain that mark of 300 likes. That will be amazing. Let's go into the content. So this morning, we talked about some weakness on the RSI. We said that the tentative target was RSI 43, which coincides with 67.2. That level is still being shown in the chart in here. We went straight into it and bounced off it. Now we are printing a green candle showing that that level has some strength to hold the price. There's an order block in here as well that is in confluence with the RSI support that we see in here. I'm still counting victory, at least that we managed to hit the first level of resistance on the CPR monthly of October. The model says that if you manage to do that, we should be seeing continuation in November. Of course, it's just a model. Don't bet your life on it. I wouldn't do so. But you can see that in September, we couldn't manage to do that and we saw a strong rejection. I was expecting that rejection to be even stronger. The model was saying that we could have gotten into 55k. That was the first level of resistance and we barely made it to the pivots. So let's look into what is the support and what levels we need to respect. I think it still stands that this is the support. RSI 41, I could say now. And if we break below that, we should be seeing further continuation to the downside. Holding here is pretty healthy. The last time we held at RSI 30 at that point on the 10th of October, we have this rally of 18%. Right now we are at an RSI of 43 and there are a few outcomes that I will expect. If we place this trend line touching these 2 points at the top, that one and this one, I will expect a very conservative target to go and hit an RSI roughly of 53. That will be resistance initially and that could be our dead cat bounce pushing us back into lower lows. If things continue or become even more bearish, there could be continuation into the area of RSI 61. But let's look at those levels in the price as well. We have 53 and 60. 53 gets us into 68.5, 68.6. And that hypothesis basically will be in confluence. Let me correct myself. Actually, it's 68.2. So that hypothesis means taking this full fair value gap that we just made. So that will look like a move into right here in confluence with this order block and in confluence with taking this fair value gap. That I will say is a quite conservative target at the moment for a dead cat bounce from here. If we continue further, that means above that 68.5 and hold it, then we can go into the 60s to 62 RSI. Let's see that in the price. Starting with 60, that takes us back into 69k. Pretty much right below where the resistance of the CPR monthly still is. 62 is a little bit further away. It's just $69.250. Basically, taking a trip all the way to here means a V recovery. So that is obviously a lot more aggressive than just getting into RSI 53 or 68.2. Now, breaking support, which is going RSI 41 and beyond to the downside, at the moment is if we break below 67K and we close a 4-hour candle below that. Unfortunately, that is a global breakdown from the point of view of this trend line that you can see in here. And that could take us as low as an RSI 25. That's because that level at the moment calculated with statistics is the bottom of the channel. I will say 26, just approximating the numbers. 26 is located around here and coincides precisely with the high that we have on the 7th of October. And it's very close to this support that we found on the 15th of October. So it is also an important level. That price is 64.5K. On the daily time frame, big things are happening at the moment. We are halfway through a big battle. This battle consists in breaking above the megaphone pattern. Basically, we already broke out in the context of being in an ascending wedge. We stick our heads above it, and today price had to come back below and see if we are actually going to fake out in this breakout and turn all this price action in here into a liquidity hunt, meaning trapping longs just to dampen them in a very similar way to what we have pretty much seen all the time from the top of the range, which is where we are right now. But interestingly, that level of support in here, 67.5, currently it's showing some strength. At least on the daily, it seems to be resisting better than other times in the past. It's too early to say because there can still be here within the day a push down, and by the end of the candle closing inside the megaphone pattern in this area in here. And then definitely we're gonna have to be talking in the following days where is our next support. But I think if today we manage to close at 67.5 and tomorrow we have a big green candle, that would be really great news, particularly because in that case we are almost 99% completing the whole story, the path that we drew around July about how we could break out from this pattern later in the year. I would have never expected that it was gonna look so similar to what we were expecting. But let's not count victory because maybe by tomorrow we are back at the bottom of the range. No one really knows really. I think that if we were to close in here, we have very good chances of completing the whole journey. But if we don't, it's not necessarily the end of the world. We still have the bull market support band, which by the way, seems to be in the process of completing a bullish cross. This is on the weekly time frame and we are just on Monday, so there's still over 6 days to go to completely confirm this. And believe me, if this candle closes somewhere in here, that is going to undo the bullish cross and open up again the mouth of the bull market support band, and then we're not necessarily gonna get it. But getting that, well, that could be really good news. The last time we had one, we had a rally of almost 200%. On the daily RSI, it seems like we found rejection here at 71 RSI. I still don't know, because if we hold at 67.5 that we were talking before and we were to push higher, I still see that there is a chance that we hit the top of the channel here at the moment now at an RSI of 73, because it keeps going higher. Of course, if we come back to the bottom of the range, that will take us somewhere around 52 RSI. And believe it or not, that is not necessarily the bottom of the range for RSI. That is just the local bottom. You still have a potential to fall into 29. It's not my intention to scare you or to tell you that those levels are very likely. I don't think so, but it's good to know where they are in the price and just to keep them in mind in case there was any sort of incredibly bearish news. The first level, I say, was 52 followed by 29. 52 is currently located at 65K. Incredible. That level has become extremely popular. And 29 is located at 54K, which is the previous low that we have early September. Let's put back the 72 that today is 73. Since the price is coming down, it has pushed the target of RSI 73 to 72.2K. So if we hold in here from 67 67.5k and we closed somewhere there, maybe 67.6k, and we were to make another push into the top of the channel of RSI in here, that takes us to 72.2k. Still not an all-time high, but very close to that all-time high. Let's have a look at the liquidity pools and let's see how things are evolving. I think both shorts and longs have done a pretty good job in terms of accumulating stop losses in both extremes of the range. We have here all the way to almost 70k, big accumulations of liquidity. These are accumulations of 1,400 and 1,600, and then in the lower end there are very significant numbers. But we have to give the advantage right now to the shorts because they need to move the price very little to punish these longs that have entered on this move. I think the longs are getting excited with this W pattern and the fact that this is pushing in this way, but we do know that this is starting to look like a bear flag with a potential continuation to the downside to take all this liquidity that is just immediately there. Now this is just a scalping channel, so we are looking just at liquidation pools that have been formed very recently, just today, and we are not seeing the liquidity from previous day. So let's go into the swing chart and let's see a little bit more the big picture. You can see in here very clearly my ascending wedge and how it broke out, it tested, and then it came back into the first level in here. I was saying this morning that this could also become a bullish flag and eventually push higher, just like we did in the 4 hour a few days ago in here. Let's move out of the way all this red so we can just see the very immediate liquidity even from the long term. So right below the price from 66.6 to 64.9, we got a very decent chunk in here. That is a low hanging fruit again to punish a few longs in there. If the price was to break down from 67.2, very easy for shorts to hit there. But then after that, there's little incentive. You see that the incentive that there is in here is similar to that one there, and the price didn't take it. So it's too little for them to want to move the price. But if things continue bearish, then they start having a little bit more of a better meal if they go into 60.7k. Now we start seeing a lot more juicy levels, and of course sub 60s, now we are talking, and they start having a lot more. If we zoom out, you can tell that none of these levels are any more visible, and that is because the levels right above the price are huge relative to any of this crap that there is below. The only reason we are hitting those levels is because there were some bearish moves in the market and that gave the edge to the shorts and they're taking advantage. But the point is, the longer we stick around to the highs in here, hopefully above the trend line, but it wouldn't be a big problem if we start hovering in this area using the bullish cross from the bull market support band, hanging around in here and doing a few more attempts to break out to the upside. As I say on Saturday in that video that got over 347 likes, it's not gonna necessarily be easy. You can see the order block in here. Just a few days we have almost 100 million in resistance. And yes, people were telling me on Telegram that that liquidity is becoming thinner, and that is a good news. For example, right now we have only 86, which is more than 10 million less. That's great, but 86 million is still a lot more than the resistance that we have, for example, in here, only 67. In here we have also 86 million. It's also good to see that purple whales and brown whales haven't necessarily sold so much. They sold a bit, but they haven't sold all the way to the bottom, which is slightly reassuring. And I think the big problem at the moment, the elephant in the room today, is what's going on with the big whale explorer. This indicator, I built it to monitor from CryptoQuant the ratio between deposits versus withdrawals of big whales specifically. And you can clearly see at each of every single top how the ratio was peaking in terms of deposits. Whenever there are deposits, we speculate that they are preparing to sell. And you can tell that you don't need a lot of imagination for that. In here it spikes, the price goes slightly higher, and what do do? They distribute. And what we are seeing today is not in the same range of the distribution that we saw before. I can even show you the raw data from CryptoQuant, and you can clearly see that these peaks that are here are huge. They reach 141,000, whereas the one that we had today is 38.7,000. So sure, not as significant, but that spike caused that this broke out from this trend line and it went straight for the moving average at 0.94. Just yesterday we were at 0.38, very heavy accumulation, and from there we went straight almost into a ratio of 1. 1 will mean that deposits are balanced against withdrawals, which is not bad necessarily, but this big move in there is certainly a little bit concerning. I will be a lot more concerned if by tomorrow or in the next hours suddenly we saw that this goes above the ratio 1, or even worse, if we make a whole journey to 1.5. I wouldn't like to see that at all. And true, deposits doesn't translate automatically into selling. It could mean in a way that they are preparing to sell at higher prices. Maybe they want to sell the news on elections, which are just a couple of weeks away, but whenever I see this pattern, I just start thinking they are planning something, and whenever I am in a long, I take it more careful. I do not just go and sell because of this, but if I'm big in profits, I tend to run things a lot more conservative. And now I understand why a few days ago I started seeing the long-term holders slightly selling in here. We could say that maybe between 15 to 20% of what they accumulated in July has now been distributed by long-term holders. That's not a great thing. And if we go back in time and we just focus on what were they doing around October 4 years ago in the previous cycle, we can see that roughly at 17th of October, they started selling, and they started selling the RIP. You can see how the higher the price goes into the all-time high, the more they continue to distribute. And that is a line that starts from 18th of October 2020 and they finish selling in May of 2021. So it's like if they spent the whole RIP and the whole time that this was rolling over, just distributing more and more into retail, which they were peaking in buying pressure at the very top just to get dumped. And yes, the dollar index, guys, continues to rally, and that is not necessarily what we want to see. Dollar rallying with Bitcoin rallying, they're not friends. They're actually inversely correlated, and when they are 100% correlated, they never win both of them for the long term. One of them has to step back, and it seems to be now Bitcoin the one that is pushing back down while the dollar continues. But you can see on the weekly that this has been the resistance, right? So you see resistance here and here on the RSI weekly 5 times, and this could be the 6th time that we hit resistance. At this point, that's RSI 57 on the weekly RSI, located at 104.3. We're getting very close to that. We'll see if that is going to remain as a resistance. We do not want that thing to break out to the upside. That is definitely bad. On the daily, the RSI still has this level of 72 as a resistance. There is some sort of fake out in here. Let's ignore it for a moment, and I think potentially 72 is going to hold the price in there. If that's the case, guys, dollar should stop right here according to RSI 72 on the daily. If that fails, once again we have the resistance on the weekly at 57, as I say before, and there's still a little bit further for the dollar to rally until it finally hits the resistance on the RSI 57. So far, the weekly RSI is still holding on this trend line, and the stochastic RSI is still with the mouth open. I covered this in the morning a little bit more in depth. If you are interested, watch the video from the morning. I just find that it's a big shame if the price was to see a rejection in here. We have so much liquidity to be consumed above us. It's such a waste of shorts to be squeezed. Not to mention that all the spread charts are shouting for a huge pump to the upside. We covered them on Saturday, but even with the move bearish today, I still see them in a very healthy state. hit each and every one of them. You can see here the one of the Fed looks fantastic, and the X as well, and the dollar index. Even the dollar index seems to be on a retest of the breakout.